The market gaps up, then chops around. Did the bulls do enough, or is it back down we go? This is Invest with Jacob. Okay, guys, so in yesterday's video, we talked about the 5,900 number being a brick wall and likely seeing a reaction off of it, and that's exactly what we saw yesterday as they tried to gap above it with the PPI data before the market opened, came back below it, and were really unable to get much above it the entire day, closing below that 5,900 number. So now the question is, have the bulls done enough, or is it down we go? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, as always, before we jump into the charts, we will check out the results of the indicator. We have built a custom trading view indicator. It is absolutely killing the market, and we're going to go over some things about the indicator that are possibly misunderstood so that it's a little bit clearer on what's going on. So let's jump into the chart and take a look. Okay, guys, so here we are on the 5-minute SPY chart. And we use this for day trading. The indicator also works very well for swing trading. You can watch yesterday's video or many of my other backdated videos that have our swing trades in there that are very powerful. Today we're going to cover the day trading, and specifically I want to start with, well, let's start with the setup first. So on the left here, we are in trading view. On the left in the yellow, that is the pre-market trading. On the right in blue, that is post-market trading. And the white in between is regular trading hours, and that's what we concentrate on. Now, you do have to have the pre-market and post-market active on your account in order for it to work properly. And as I've said in every single video, you need real-time data on the NQ and the ES. What is the reason for that? Well, on a standard trading view account, you get delayed data for the futures markets. And so you're 10 minutes behind on those charts. In our indicator, it's called IWJ Pivot Point Pro. In our indicator, one of the things we do is after calculating all of the price action movements and where the levels are, we look at the SPY, the ES, as you can see here, and the NQ all together, and we want to make sure that all three charts are moving in the same direction at the same time because this creates momentum. It means they're buying up all the markets. It means that the support areas are likely holding, or resistance areas are likely holding on the charts, and we're very, very well set up for a potential winning trade. If NQ and ES are moving in different directions, you will not get a buy or sell signal because the markets are not in sync, and typically that creates a very choppy, unreliable market. Now, you have to have real-time data to get this. If you're 10 minutes behind on the delayed data, as I said earlier, then the buy and sell signals on the SPY chart will come up late. They will come up 2 bars later. So it'll be way down here on the chart. You can see you got 2 straight bars of down. And then all of a sudden a sell signal will appear back here once the ES and the NQ catch up. This is why you need real-time data. They have to be in sync on the same bar, or you're going to get weird signals and it's not going to work. This person decided to comment and say that the bars only print after the market close, or after the buy and sells only print after the move happens or after the bars close. This is inaccurate. And I took a screenshot of this as it was happening so that you could see here the 4th bar of the day on the 5-minute chart is a sell. And I took a screenshot midway through the bar. You can see on the screen right there, the sell signal is already there and the bar hasn't closed or isn't even close to closing. So it's an inaccurate thought to think that the buy and sells come up after the bar closes. And this is really the part of the internet that bugs me. When people can't do, they complain. When people don't understand, they complain, or they try to put you down, or they try to tell you you're a liar or a cheat. And in this market, in this specific realm of stocks and indexes and trading, there are some shysters out there, and that sucks. I created my room because of that. I wanted people to be in a friendly environment where somebody truly cared about their well-being and wanted them to succeed. And that's what we're here for. Some people condemn me and say, if you're so good at trading, why would you build an indicator? Because it doesn't hurt me and it helps people. I am here to help people. That is the best part of my room. I have over 600 traders that trade with me, many of them making money for the first time ever in the market because they finally understand it. If you had a widget that not only didn't hurt you, but helped many, many other people, and by helping them, it also helped you, wouldn't you want them to have that? Wouldn't you want them to succeed because you succeed also? That's an amazing feeling. It's an amazing feeling to help people, and that's why I'm here. So I don't really appreciate people that won't just reach out to me and say, hey, why am I getting signals late? Why don't my signals match yours? So I could tell them, you don't have it set up correctly. It's not a big deal. We can get that fixed. Instead, they ridicule and mock, and those will be the people that never make money in the market and never understand. So sorry for my soapbox moment there. I do truly care about my traders. I put out good stuff, and I do that because I want people to succeed. It's very hard to do without help or without tons of study. And I've done both of those, and I'm really excited to help people because emails like this that I got today, your indicator is amazing. Emails like these other ones or comments like these other ones, people making money in the market. They're ecstatic. I'm ecstatic. It's amazing. It is really a fun thing to be a part of, and I want you guys to be a part of it. So anyway, as we're talking about the indicator, how it works, fourth bar of the day, we get an awesome sell signal here, right here at around 585. They run it down to 581.96, an awesome win here, $3.5, $4 win on the way down. This buy here is actually a win, and true to my word, I'm going to show you that it was a win on the screen. It's a small win, about 13% or so, but it's a win. We get a buy signal here, we get a small win. They bring it back down, and because the buy signal doesn't push us out of the sell, you get a stop and set instead of a sell here. So we didn't get the move down, which is okay, it's no big deal. You got a buy here that actually stopped out. This one was a loser. And then down here was tricky. It was a small winner, and depending on how you set your stops, they came down and poked this low. If you set your stop deep enough, we didn't. It was like I said, you had this rocket ride higher. So the buy was correct. They came down and kind of stopped everybody out. Sometimes you get that. Sometimes the market just pulls a trap on you, gets everybody out, and then makes the move. But the buy signal here was pretty much on the button with the move up. They just ran a quick trap to the downside. So another great day for the indicator. As far as identifying the trades, it makes it super simple, guys. It's price action based. It's not about crossover averages or the 9-day or the 9-hour or any of the exponentials or any of that. It's price action, and it's real-time price action. We are trading off of key levels, and that's what matters, and that's what you want to see out of an indicator. It's not waiting for 4 or 5 bars. You got this almost at the exact top of the day. You got this at almost the exact bottom of the day. That's what you're getting, is the exact highs and lows over here. We don't trade after 10 p.m. or 10 a.m. Pacific because the market tends to get choppy. But over here, you had another crushing buy to the upside and a crushing sell to the downside. So it's always getting you in near the top or the bottom of the move because of price action and what it's trading off of. It's extremely helpful. It's helping tons of traders win. I want you to have it. I have a 30-day money-back guarantee. I want you to try it out and see if you love it as much as the other traders do. Here's how you get it. There's a link down in the description. Click that link. It'll take you over to our webpage. Once you're there on our membership, TradingView Indicators page, under membership plans, TradingView Indicators here. It's $59 a month, $590 for the year. They both come with a 30-day money-back guarantee because I love this. I know you'll love it. I don't think we'll have any issue. But if you don't like it, send me an email. I'll give you your money back. No big deal on that. And all you got to do here is get the indicator, click down here. But you can scroll down and read what everybody is saying about it, how they're using it, how it's helping them change the way they trade, make money in the market, and absolutely kill. Comes with training videos on when and how to take profit, all that kind of stuff. Very, very easy to use. I really want you to have it. Again, 30-day money-back guarantee. Now, let's jump into the chart and take a look. Okay, guys, so here we are on the 4-hour futures chart for the S&P 500. Yesterday, we talked about the bounce. I told you that 5,900 would be a place where we'd likely see a reaction right off of this breakdown area right here, which is 5907. They spiked just a little bit through that before the market opened into our secondary resistance and then never got back up there. Then they pushed down pretty hard during the day, and we're kind of at one of those crossroad moments where you have a potential in both directions as far as a more clear setup. And what I mean by that, I know that sounds kind of confusing, but what I mean by that is this. So we're looking at two potentials. The two potentials are that wave 4 is done, okay? And all that would happen is this 3 would move up here, this 4 would move over, and then 5 over, and 4 is done, and we're starting wave 5 higher. The other potential is that we've bottomed in 3 there, as I have it marked right now. 4 came right up to the 382, which was right around that 5,900, and we look for 5 down into this blue box. which is about 57.80 or so down to 56.50. So that is the downside potential. The upside is the wave 5. And what I mean by the two-way potential is you're always looking for 1-2-1-2 setups. Those are the best in either direction. This is one of them rare instances where you might have both. And what I mean by that is you have an A. So this is the potential bullish count. You have an A, a B, a 1, and a 2. And then you'd be having a 1 back up here for wave 3 to start. So you'd have 1, 2, and then break out like this. So you have that set up for the bulls. And if that's the case, we'd be looking at this count as an ABC up first, because remember, we're in a diagonal. We've been talking about this for a while. If you zoom out to our big picture, it's a diagonal off the 2022 October lows. So it's a giant diagonal, and then this last wave is also a diagonal. So you're dealing in ABC structures, very confusing and hard to deal with. But we would look at this as A, B, and C of A. A, B, and C of A, then B and C for A, then a bigger B wave, and then C higher to 6,300. So again, that's A, B, C, which makes up your A wave. Then you'd look for a B wave pullback off of probably this area right here at about 6,100 or 60, I'm sorry, up to about 6,100. So you look for an ABC. That would be A of A, B of A, and then C of A concludes right here at about the all-time highs at this major breakdown zone. And then you'd get a rejection off of that level for your B wave, and then C comes back and breaks out to the highs towards 6,300. So that would be the path for the bulls, and you do have a decent setup for that path. Now, on the flip side of that, do you have a decent setup for the downside? And the answer is yes, you do. And this is one of those rare times that that happens, where you have a bounce that stays within wave 4 territory. So they're at the 382, and this is where the crux comes in of this position. So you have them inside or just above the 382, under the 50, so a perfectly reasonable wave 4 bounce here. And then you'd be looking at A down, and then you'd have B up, and then be building your wave, your C wave to the downside that would take us down into this blue box. So you have a setup in both directions because the bounce wasn't high enough to eliminate the wave 4 possibility, which does need to move up here. You do have a potential C wave in both directions, and that is where the CPI setup comes in. So CPI is likely to move the market some amount of points in one direction or the other. And you have a C wave set up to the downside that would take us into the blue box, and a C wave set up to the upside that would likely take us up into this 59.90 area or so. That would be our next resistance zone. Then we'd look for pullback off of that again, and then this would be A, B, and C. So the one thing to note, they did retrace to the 618 here. A breakdown of 58.30 likely leads us into the blue box. They can come down and tag 58.30 and then go back higher, but they must hold 58.30 to keep the bullish path alive. Below that, and we're likely into the blue box. So your key level to the downside is 58.30. Below that, you're looking at 57.70 down to 56.50. And your key level to the upside is yesterday's high. They break above that, and we're likely on our way to 59.90 to 6,000 over on the NASDAQ. All right, on the NASDAQ, very similar. I don't have to get as in-depth because everything I just said on the ES is basically going to be true on the NASDAQ. We'll go over that here in just a second. They came down. They bounced it back up to the 382 here, 21,119. We talked about this area yesterday at about 21,165. They were just shy of it. They didn't quite get all the way there, and they rejected. So as of right now, they retraced down to the 764. That means they're at the end of their line here to the downside. So should they come down and break this low, very likely we're headed down to the 20,400 area next. You can see we have a nice resistance, or support zone down here, 20,400 or so, down to about 20,380. And they got to hold 20,112. If they break down below that, then the bigger pattern is broke, and we will look at some other options from there. Now, again, we do have a B, C setup, which would be A of A, B of A, C of A, B, C, like this. And to the downside, we also have wave 3 completing wave 4, and then you'd have A, B, and then C down to that 20,400 area. So again, you have a two-way setup on the NASDAQ. It's a lot weaker than the ES, and to be honest with you, the downside does look like it wants to play out. But until they actually break this low on the NASDAQ and break down below 58.30 on ES, there is still bullish potential to the upside. So just be careful with that. This is not necessarily the time to get long if you want to gamble. If you're a little more aggressive, I should say, not necessarily gamble. If you want to be more aggressive and you got your key levels to the downside, getting long would be okay. Understanding that you got to be nimble and get out when they break these lows, and CPI is going to be a big moving factor. You might want to be, if you're more conservative, you might want to wait for A, B, C of A, and then B of A, and then catch this C wave. Get long there, sell, wait for the pullback, and then get long again to ride it up to the 23,000 area. So that's what we're looking at on both charts. Very similar setups. Sometimes you get these two-way setups when you're in these ending formations where you have a potential bottom and you have kind of a two-way setup here, whether they've bottomed or not. So be nimble tomorrow. Above the highs, we're likely headed up into this 21,400 area. Below this low here at 20,800 or so, takes us down into the 20,400 to 380 area. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to the webpage. Once you're there, check out our membership plans area. We have 2 incredible monthly plans, and they both come with a 7-day free trial. And this is something I talk about in the intro, what I put out there. I give you a 7-day free trial because I want you to get in there. I want you to hear what I have to say, see it. You don't have to trade a thing. Come in there and check it out. Get on the daily calls. We'll talk about those later. Those are an hour long. Go over all the charts. I make sure that all of your questions are answered. I try to make everybody feel comfortable with what they're trading outside of what I trade, with the key levels. We go through a lot of information, and I want you to be a part of it. You can check it out without any risk whatsoever and cancel at any time. You literally have nothing to lose by checking it out. We also have our educational material, which is our Elliott Wave for Beginners online course, as well as our Advanced Elliott Wave courses. These courses are helping real traders understand the market. They're finding the key levels that nobody else can find. They are understanding when the trade setups are there. They are helping traders truly make sense of an irrational market. In the advanced course, we're going over the exact things I talk about in the videos, such as the advanced fib levels, the diagonals. We're going through lots of those right now. Double and triple threes, the flats, the triangles, and then how to trade Elliott Wave. This module right here alone is very important to understanding what trade setups look like and what they are. These things are super important to kind of master so that you can understand where good setups are. You can see on the screen that this is helping traders understand the market and make money, and that's what I'm here to do, is help you. But if you're just getting started and you just want to figure out Elliott Wave from the beginning, we also have our Elliott Wave for Beginners online course. This course is helping real traders make real money and finally understand the market in a way that makes sense. It can be very confusing when the market has good news and goes down, or the market has bad news and goes up, and it's because the news doesn't matter. Elliott knew this long ago. He knew that the key levels mattered, and he knew that understanding what happens when key levels hold and break and how to trade them is a huge advantage over the rest of the market. This course is 25 videos. We go through 3 parts. We go through your introduction, where we go through your expectations, your mindset, the KISS method, and why this works, your chart setup and tools, everything you need to use with Elliott Wave, how we use it and why. And then the Elliott Wave for Beginners area, where we go through each of the waves, your corrective depth theory, the theory of alternation, the pivot, everything you need to know to make sense of this irrational market. Now, the cool thing about this is if you want to get them both at a discount, we do have our bundle pack, and you can get both of them for $37 off. However, if you want to get them for free, simply join our monthly rooms, as they are included in this price. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video that I talked about earlier. It's about an hour long. I go through all the charts. I go through gold, the Mag 7, Bitcoin, the RTY. Anything you want to go through, we go through it and give the key levels and talk about it. We go through it so that you can trade it and understand it. It's really a great call. I think the call alone is worth the price of the room. We also give you the training material we just saw, the Elliott Wave for Beginners and Advanced Elliott Wave course. That's included for this $49 a month. So really incredible value there, guys. We trade the SPY and the QQQ. And we do day and swing trade in my room, so we do trade quite often. But if you're looking for futures trading, individual stocks, income trading, and advanced trading, you need to check out PT's Throne Room. In there, you get everything you get in my room, as well as individual stocks, advanced trading with his reduced risk binary method that gets you in at a cheap price and get you big multiples on your money. Something you kind of have to see to understand, which is another reason we give you the 7-day free trial. He's got income trading, and he trades futures in that room. He also has a challenge account where he put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. Right, our key takeaways for today. We do have a two-way setup right now, and the bulls need to hold the low from yesterday, which was about 58.42, 58.30 being the key level. I think if they break 42, they're likely to break 30 as well, but 30 needs to hold. If 30 can hold, we can see them push higher. It's very possible they can break it in like a CPI spike. You know how CPI, like the first thing does this, and then all of a sudden it does this. That's a very possible move for tomorrow. But 58.30 is our key level. Below that, and we're very likely into the blue box. To the upside, if they can break out over yesterday's high, we would look for this 59.90 to 6,000 area as our next resistance. Then that would be A of A, B, C of A, and then B and C after that. Over on the NASDAQ. Okay, on the NASDAQ, very similar. We have two-way setup. Key level to the downside is 20,800. Below that, and they're very likely coming down to the 20,400 to 380 area. Back above yesterday's high, and we can look at the NASDAQ in the 21,380 to 400 area. So two-way setup on the NASDAQ as well. Just depends on how CPI goes. We'll have a very good idea after that, I believe, of where we're at. Guys, that is your market update for today. I'll talk to you tomorrow.